This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. Post-Thanksgiving, post-Black Friday, post-Cyber Monday, let me share with you a little interview that I did recently. Actually, an interview of me by Dan Ferris of Stansberry. No big setup, no big delay. Let's jump right in. I hope you enjoy.
All right, it's time for our interview. Today's guest is Michael Covel of trendfollowing.com. Covel is the author of five books, including the international bestseller Trend Following and his investigative narrative, Turtle Trader. Covel posts on Twitter, publishes his blog, and records a podcast weekly. His clients are in 70-plus countries, and he splits his time across USA and Asia. Michael also admires The Fountainhead by Ayn Rand, collects dinosaur skulls, took a constitutional case before the Virginia Supreme Court, likes the Anthony Bourdain travel life, can still swing a bat with authority, and once ran for political office. Renaissance man Michael Covel, welcome back to the show.
Thanks, Dan. Appreciate it.
You're a busy guy.
I am, and I'm just coming out of jet lag coming from Asia for the last 2.5 years to the States. I'm getting my sea legs under me.
Yeah, I'll tell you, when you fly back and forth across the country, it's one thing, but you come from Asia and you can have a real problem.
I'm raising my hand right now and saying, yes, I understand this problem and it's no fun. There's no solution except time.
I'm going to jump in because we've had you on the show before, of course. We've talked about backstory and things and how you got started, but I want to jump into the deep end of the pool. I'm like, I have to have Covel in the program again because he's the trend following guy. And it sure seems to me like a lot of people are following. They're following into huge speculative bets nowadays. They're following each other into massive call option volumes. It looks to me like there's a lot of following going on, but I thought I should ask the guy who really knows about this. How does the world look to you right now?
I think you got it on the mark. I mean, it's not the kind of following in my trend following world. This is more like bubble mania, lemmings off the cliff following. Now, of course, I'm not really a fundamental guy, but when I look at some of these value pros out there, the Jeremy Granthams, the John Hussmans, okay, people have their beliefs about these guys, but you know what? They're pretty solid value guys. And when they start throwing these metrics up that we are in the wild, wild west of speculative mania, I mean, they'll say we're past .com stage, which on a gut level I feel like we are too. From a trend following perspective, I'm kind of like, hey, look, as long as the bubble is rolling, whatever market you're in, you ride the trend. However, there's the side of me that even though I don't use the information from a Hussman or a Grantham, there is a level of respect for their wisdom when they start to look at these metrics. And when they're looking at value metrics and saying, we're off the charts, we're past the 29 crash, we're past the .com crash, we're off into loony land. And then on my own personal level, when I talk to people that have got millions and millions of dollars, some of them in open profit, and they're not worried at all, this has got an odd feeling to it. And I'm sure you feel the same way.
Oh, Michael, if anybody listens to me for 10 minutes knows that I am way in the Grantham-Hussman camp. I quote those two. I quote Hussman all the time, quote Grantham all the time. We have a question I'll read in the mailbag later in the show today about the metrics that some of these folks look at. In particular, one of Hussman's 5 earnings-related metrics is actually price to sales, not price to earnings. He knows the whole history of it, and it has correlated negatively 90% with the S&P 500. So when it's way high, the subsequent returns are way low. And people are asking, well, maybe these metrics don't work anymore. To at least some extent, you have to believe it's different this time, and it never is. The metrics might change, but human nature never changes, right?
We're animals. speculative mania. I mean, everybody is getting rich. And when everybody's getting rich, there's often a moment where everybody stops getting rich. It's really that simple, isn't it?
I think so. What I keep telling listeners and readers is that I'm not going to call the top and look at a particular metric and say, this is it. It's all downhill from here. What I can do, I think, is since I've got some gray hair, I just turned 60, I can tell you what it feels like because I've been at the top multiple times before. This feels, and I think you'll agree with me, this feels as toppy as it's ever felt, certainly in our lifetimes.
It sort of feels insane. It feels like we've come unmoored. For me, spending a lot of time outside the States, of course, I'm in the markets, looking at the markets, all that kind of stuff. When you come back here to America and you start to feel this energy, you go to something like Tyson's Corner Mall, everybody has this gait in their step where they feel like they are a billionaire. For me personally, it reminds me of the .com era.
Yeah. It's funny, Michael. I don't know if you remember this. There was a bumper sticker that got a little bit of airtime during the .com bust. And it said something like, please, God, just one more bubble. And it looks like they got their wish.
What's really interesting for the audience to think about, too, is that when we had that .com bubble, okay, things crashed out, bottomed out in the fall of 2002. Then everyone knows what happened after the fall of 2002 because everyone watched the movie The Big Short. Everyone knows what happened until 2008. It's almost like we've turned off everything and no one's thought about what's happened after The Big Short movie. There's a 13-year window where it's like, we watched The Big Short, we know what happened, but what happened after The Big Short? Oh, don't mind that. We're all getting rich right now.
Yeah, that's right. It doesn't matter because there's another one right behind it. Don't worry about that last bubble that just blew up. There's one right behind it.
You made the point, though, too. It's not about, for me, from a trend following perspective, I'm not trying to time the top. Again, when some of these value pros, not my world, but when some of these value pros start to lay out some of the quant metrics on the value side of things, it does perk up my ears a touch. Even though I've got my stops, even though I'm following the trend, so to speak, when a group of people from an entirely different style of investing start to lay out those metrics, and then when you start to see on the ground the behavior of people, when you start to see all the people that really have no technique at all, but an absolute ton of open profits, that's when you start to have these memories of like, oh, this reminds me of something.
Yeah, it does. I'm glad that we're talking about this and that you mentioned the value metrics and things. Because let's face it, the advantage of the approach that you have championed for many years is that you can forget about everything except for the price action. However you follow price action, and you can forget about everything except for that because it works. And yet, the trend following guy is sitting here telling me, what I hear, Michael, is that you can't look away from those extremes. You can't look away from those extremes of fundamentals that are worrying people like Hussman and Grantham.
I don't have it as part of my model, but you can't help but not see that. You can't help but see their expertise, especially just on a basic human level, looking at a 13-year run. And we all know what happened after The Big Short. I mean, the Fed swooped in and did all kinds of gerrymandering, so to speak, and other regulatory agencies changed other rules, and we've had a great run. Now, the question is, and what I pose people is, do you ever ponder the possibility of 50% of your net worth just disappearing and not coming back?
Yeah, that's a good question. As we sit here talking around Thanksgiving, it's like the Thanksgiving turkey. Like, do you ever consider that scenario where you're getting fatter and happier every day? You think you got the greatest life you could ever have, and then you wake up and your head gets cut off. They're totally unprepared when a bubble turns and becomes a bust. But not trend followers. They're always prepared because they use stops. So to some degree, I can understand the more laid back feeling that you've described among some of these traders. They should feel that way, right?
I think if people don't really have a strategy and they're just in index funds or they're playing in crypto and everything is going straight up and they have zero strategy, like no planned exit, like I don't really think anybody should ever be in the market unless they know when they're going to get out before they get in. If you're going to get in, have a reason to get out before you get in. It seems like a very common sense way of thinking, but most people don't approach it that way. They hear something from the news or the media, their neighbor, whatever, they jump in, and then if they get profits, all of a sudden they're an expert. They think they've done something. And I'm not trying to be all that. I'm not trying to say I know all that. But if you don't have an exit point, an uncle point in an environment like this, again, back to my 50% question, are you okay losing 50% of your net worth? If we have another one of these meltdowns, and we've had them, the NASDAQ bottomed out at minus 77% in the fall of '02. Now, can the vast majority of Americans, after a 13-year run bull, can they accept minus 77% as a possibility even? I don't think so.
Well, certainly not the ones that are 21 years older.
Everyone knows right now the boomers got all the money. The young kids have basically nothing. I think that's one of the reasons they've jumped into crypto. Crypto is exciting and new, and some young people went ahead and have made some early money, and then their friends hear about it and everyone wants to jump in. I'm not one of them, but I know plenty of people that have made millions upon millions off crypto, and I salute them for taking that gamble. Again, with any of these types of speculative trades, you got to have an uncle point. You got to say, when I get in, what will cause me to get out?
Hopefully your uncle point is not at the bottom where everybody's uncle point tends to be, which is how bottoms are formed.
That is the behavioral finance 101. Very few people that don't have the exit strategy, they're not going to, even when it starts to go down, because what's the human nature? The human nature is, well, hold on. It's come down 10%. It's come down 20%. It's come down 30%. It's come down 40%. But if I just hold on, it will come back all the way to where I was.
Yeah. When you hear somebody talking about getting even or getting whole again, and then I'll get out, that's cringeworthy, isn't it? It's just, that's how you know they're about to lose it all, or a big portion of it all.
How do you feel about this right now? Do you share the perspective that it's kind of wild and woolly right now?
Yeah, absolutely. I'm super bearish. Yet, like you, as long as I find long ideas that are attractively priced, I can't not write about them and recommend them to my readers and buy them for myself when I find them. I wind up being sort of long. I don't think you should ever say, you can't call tops and bottoms. They call themselves. You have to keep with your strategy. My strategy includes holding plenty of cash, holding some gold and silver, a little Bitcoin. Then just if you keep finding an attractive stock, you buy an attractive stock. There's no reason not to, because you won't be the one who calls the top. I wind up just being cautious, sort of like you. My strategy doesn't change. I'm looking out the corner of my eye and I'm thinking, this thing is going to fall apart at some point and you better be ready for it. I'm constantly telling people, don't predict. You can't predict. Just prepare. You don't have a strategy, you're screwed.
I mean, even if someone just takes a casual look, okay, yes, the NASDAQ, so to speak, is at its all-time highs. If you look at some of these high-flying type tech stocks in the last 2 years, I mean, a lot of these are down anywhere from 30 to 75%. There is a bear market underway, a huge one. I mean, you could argue some of these things have crashed. The NASDAQ is at its all-time high still. That's another little part of the side metric for me that raises the red flag.
There are sub-bubbles popping. The ARK funds peaked in February. A bunch of stuff peaked in February. The Clean Energy Fund, SPACs peaked in March or February, and a couple other things that I can't call immediately to mind. But Michael, what I keep thinking is, well, this represents, in a way, the topping process that took something like 2 years. If you look at all the sectors of the S&P 500, they topped over a period of 2 years during the dot-com boom and bust. Now, maybe we're getting the same thing. On the other hand, this process... Who knows,
yeah. Right? The extremes of this could go up another 100%, like 1999 NASDAQ. 1999 NASDAQ was 100% that year. I'm not sitting here trying to tell anybody to go take an exit right now. I'm saying, look, it's just, you got to look at historical norms. You got to look at where we are and at least hold your thumb up in the wind, so to speak, take a measure of where we are. That's not telling anybody to go out and sell everything. I'm saying, you need a strategy. You need that point of like, what gets me into a market? What gets me out of a market? How much am I going to bet on a market? What markets am I trading? These are just the basics. And I just have a gut level feel right now that a lot of people are not working with the basics.
I think that's just always true. Too many people do not have a strategy. They're brand new. They came in the last couple of years, like since COVID started. They're going to get wiped out. We definitely agree, though, you don't change your strategy. You have one to begin with and don't change it based on bearishness or worries about a highly speculative market.
I think if anything today, you and I are both just trying to tell people, if you've been out there on the loose, so to speak, and you've really not had a strategy, maybe given to where we are on the all-time highs on equities, maybe it's worth just having a pause moment over the holidays, doing some assessment, picking up some reading material from some smart voices, doing something to where maybe you just want to not just keep trusting that equities to the moon is a guaranteed fait accompli, because it's not.
No, it certainly is not. I mean, over the very long term, 20 years, 30 years, we've certainly had sideways periods, but you have to buy at the peak to really get hurt by those sideways periods. And most people just keep contributing and keep buying over a period of years. If you're allocating carefully and slowly, you can just average across a really miserable period and wind up doing really well at the end of it.
I find the one metric from Hussman really interesting where he lays out from his perspective. Again, I'm not a value guy. I'm a trend following guy. If we're at all-time highs and we're going higher, I'm following along. Now, Hussman has a perspective where he says, from his perspective, that the valuation metrics have U.S. equities so overextended that if we were to stay at this level, you should expect, if you are a buy and hold investor, you should expect basically 0% return for the next 12 years. I think I'm phrasing that correctly, how he says that, which I've always found a very interesting way of thinking about it. Now, that doesn't mean it's going to happen exactly like that, because the markets can go up, they can go down. That's a way to think about, from his perspective, how overvalued we are.
I've been telling people you can do one of two things. If you're dollar cost averaging into a 401k over time, you're going to buy the least number of shares at the top. You're going to buy the most. If this thing turns into a bust in 2 years, like the dot-com boom and bust, then you're going to buy the most at the bottom and across that whole bottoming process. You can continue to do that if you're an active investor and you're buying and selling and trading like all your clients are traders, then man, if you don't have stops in place, are you royally screwed? You absolutely must do it. And position sizing and stops, we agree on that. We know that. What I want to know is if any of your clients or you change anything, if you get the conviction that, say, one of the big indexes, you've cited the NASDAQ, if you're convinced the NASDAQ is in a huge downtrend, bear markets are brutal. It's really hard to make money, short or long, anywhere throughout a bear market. I wonder if the trend followers change anything if they conclude that the big indexes are in bear markets.
This would be confusing for some people listening, because they might be saying, well, this guy Mike is talking about Grantham and Hussman. Sounds like a value guy. But listen, from a trend following perspective, I'm simply looking at the price. And that means everything that we're talking about doesn't factor in to the soup. From a trend following perspective, you're never going to get the top. If we were just to talk about something like the NASDAQ index, you're never going to get out at the top. You're going to get out after some period down from the top. You can imagine just a market going up and a market coming down. Trend followers always get out after the top. They don't ever time the top. I think a lot of the things that we're talking about are really interesting just from kind of almost a personal gut level sentiment indicator. That, I mean, look, I remember back to the late 90s, living in the Northern Virginia area, watching all of these people that seemed almost like cartoon characters working in America Online. And I thought to myself, these people are not very bright. Their jobs are silly. The whole thing is kind of silly. Then at some point in time, we had ultimately one of the biggest meltdowns in the history of America. I didn't trade off the fact that I was making these observations. At least you can't help but notice them if you're human. When some of the people you least expect to be involved in money are talking about money, then, time to pay attention. I'll give you an example. And this is not meant to sound bad or anything. The numbers of ladies that have come to me asking if now is the time to buy Bitcoin when it's past 50 grand a Bitcoin. Let me tell you, there's a lot of people out there that are throwing money at crypto with no earthly idea what it is and no earthly idea what their plan is. Those kinds of things, when I see that, takes me back to the dot-com era. Now, it doesn't mean I'm trading off that. I'm not making decisions off that. From a sentiment perspective, it's telling me something.
Michael, do your clients mostly trade futures or stocks or options? Is there one overwhelming type of vehicle that your clients favor?
No, there really isn't. Traditionally, trend followers started with futures. Leveraged ETFs have worked well. Leaps options have worked well. The long-term options that really don't leave you dealing with all of the Greeks, no time decay and all that kind of stuff. Because from a trend following perspective, you want to have a farther out view. If you're going to trade options, you don't want to be caught up with all the Greeks and whatnot. I mean, that might be fine if that's someone's style, but from a trend following perspective, that's not what you're really after.
Greeks are always a factor. I guess you're saying if you go farther out and get the trend right, let's get that.
Yeah, it's more directional. That's the goal there. I generally will get people to look at either futures or leveraged ETFs. There's quite a few ETFs out there that are actually comprised of futures contracts. Sometimes, and a lot of investors don't think about this, there are many markets out there that really are not correlated well with equities. Another reason that trend followers do really well during bubble times is because they are diversified across markets beyond equities. When these bubble things happen, when these bottoms happen, I got to tell you, I've done the research. People can see it in my books, whether you're talking about 73, 74, you're talking about the 87 stock crash, you're talking about the dot-com crash, you're talking about 1998 with long-term capital management, or you're talking about the big short period. All of those time periods, trend following is the absolute number one best performing strategy. It's not even a debate. If people are concerned about some of the things that we're talking about right now, trend following is definitely an option to keep in your holster because you will avoid, if some of these terrible things that we're talking about do happen to happen. Again, I'm not predicting them. I'm just laying out sentiment. Trend following is a great option.
We've interviewed Jack Schwager, the Market Wizards guy, and of course, he's interviewed lots of trend-following traders and various kinds of traders over the years, including some of the original turtles and stuff. Some of the folks that he interviewed in one of his recent books were saying the old chart patterns really aren't working so great anymore.
Trend following is not really about chart patterns. Yeah, I know Jack. Jack's a very accomplished author, and he's interviewed a lot of great people, and I've interviewed a lot of the same people. From a trend following perspective, though, anyone that wants to make the case that trend following is dead or the classical trend following methods have not worked, my gosh, just look at the last 2 years, the amount of money made in trend following since COVID really started rearing its head in March of 2020 until now. I mean, it's been an absolute gangbusters of trend following performance in 2020 and 2021. I mean, off the charts performance, amazing performance.
When you talk about trend following, you're talking about so-called quantitative hedge funds?
I mean, just price action trend following, the good old something very simple. Hey, here's a momentum indicator, breakout moving average. You're taking a position. When you take that position, you have a stop. You know what your position sizing is. You're not going to bet the farm on each trade, and you're going to have a diversified portfolio of markets that you're looking at. So it's not just, for example, tech stocks. That's really the perspective. I've seen it over the years. People love to talk about trend following dying, but we're definitely not there. That's for sure.
Trend following sounds like a really general term. Is it just one thing? I mean, I can't believe that all those clients in 70 countries are all doing the same thing.
I would call it a general term. I mean, the way that I write about it, it's a very specific style of strategy that has been employed by numerous funds for decades. I mean, we're going on back to Richard Donchi in the 1950s. It's been around for quite a while. Now, people might choose to have a slightly different entry indicator. They might decide to bet a little bit more or bet a little less, and that will affect their performance. The bottom line is most people are not interested in trend following because they are those people that are out there right now, long only with no exit, just trusting the system. Most people don't really want to go down the path of where I exist and probably where you exist.
That's right. Most people are bored by this, aren't they? They're just like, wow, you just want me to use the same position size on everything and only trade, whatever it is, a 21-day breakout back in the day. And that's it. That's all I get to do. It's not very sexy, is it?
People do want excitement. They want to pick the stock and they want to believe in it. They want to have the story, whereas I don't care about the story. I just want to make money.
It's almost like Trend following is taking all the fun out of it, though.
I'm sure some people could look at it like that. If you want fun, go to Vegas,
Covel's taking all the emotion out of it, but I was having fun.
Yeah, look, seriously, I think Vegas is more fun than just gambling in stocks.
That Vegas line, you hear that a lot from folks on your side and my side. They all focus on taking the emotion out of things, and it's kind of like, oh, really? So this is like work? People don't want to do work. They want to have fun and make a ton of money real fast.
It's going to be interesting to sit back and watch what happens here. Maybe we'll get some excitement over the holidays before I head back to Asia in January. Because, let's face it, when things really go haywire in the equities markets, it is exciting. Now, people don't like it. A lot of people don't like it. Now, some people like it. Some people make a lot of money when that happens. The grass is always greener, depending on what your strategy is.
The excitement we're talking about would be like a big move downward in equities finally to blow off some of the steam. It reminds me of, I was watching one of the old Indiana Jones movies. I think it was the first one. When I first saw Raiders of the Lost Ark, it hit me as a younger man. I looked at the screen and I was like, oh, excitement is a lot of really unpleasantness suddenly in your life. I don't want excitement. I just want to know, what have you been up to? Are you up to anything different or new and exciting?
The best way to say this is I'm a guy that lives in Asia, so I'm always got my hands in something. The big something I've got my hands in, I'm not ready to announce yet. Beyond that, if anybody would like to have the trend following expertise and reach out to me, that's been my life for 20 plus years. I'm always there. When you're living outside of the USA bubble, there's always motivations and influences that inspire, and I'm in the middle of those.
Yeah, Asia is just the most hustling, bustling place I've ever been in the world. And it's a big continent. To say that about an entire continent is something. I guess mostly like Southeast Asia, Southeastern China even. Most hustling, bustling places I've ever been.
You say the operative word. The operative word is hustle. It's infectious. It is so infectious. Can't let go of it.
What would you tell somebody who said, I've been thinking about moving, somewhere else in the world outside the United States? Would you still be an advocate of heading far east, young man?
Well, I've been living in Saigon for the last 8 years. So is that a good answer?
That speaks for itself, doesn't it? That is a pretty good answer. All right.
What else can I say? The proof's in the pudding.
It is. You're walking your talk. I do want to ask you our final question, which is the same for every guest in every interview, no matter what the topic. That final question is, if you could leave our listeners with a single thought today, what would it be?
The final thought that I would leave people with is the idea of escape. I don't think the great debates that exist in America can be solved. And I think living outside of America, I'm more accurately able to see that this is a never-ending, almost like a game that the higher-ups have put everybody into, to have this constant debate that we're going to get to some improvement and all that stuff. I just say escape. Escape mentally, escape physically. Don't allow the system, so to speak, to wear you down. It's not worth it. The world is a big place, and there's absolutely no reason to stay preoccupied, for example, with U.S. cable news and USA politics. There's never going to be a victor. And if anything, the trend line for where America is politically is not a positive trend line. Now, someone might say, well, that doesn't sound optimistic, Mike. Do I sound not optimistic? I'm not a pessimistic guy. They don't have life extension yet. There's only a limited amount of time we have. What are we going to do positive with our life? I say escape mentally and physically. Leave it behind. Find something you love to do. Stop messing around. Stop trusting the system. Stop trusting the voices on TV. Do your own thing. That'd be my single biggest piece of wisdom.
Excellent. Thank you for that. It's always a pleasure to speak with you and get your ideas and find out where your head's at any given moment. And I promise you, we'll be doing it again at some point.
Great stuff, Dan. I appreciate it. If anybody wants to find me, I'm easy to find at trendfollowing.com. I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times.
To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.